Today we've chosen a sector, in fact, and that's the staffing space. Reason being, Edelweiss Securities has come out with a report on the same. Let's discuss the report in more details with Alok Deshpande, who's a research analyst at Edelweiss Securities. Hi Alok, good afternoon, and thanks a lot for joining us. First up, tell us what's making you so bullish on this services space.
Well, if you see the business services sector today, I think increasingly more and more companies are looking to outsource their non-core operations, and that essentially forms the business proposition for many of these companies. So the way we have looked at this sector is we have essentially looked at three large segments within business services, private security being one, staffing being the other, and also facility management. Now put together, these are somewhat like a $25 billion segment already in India, and this is a very large size. And looking at the way this thing is growing, I think we are looking at a $70 billion plus sector by 2025, and that the sheer size of this opportunity is something which has excited us in terms of how well the sectors and the companies in the sectors would do.
Alok, good morning. Good afternoon rather. Would you believe that the benefits of such transition for the sector at large, I mean, you know, the dynamics are in your favor, or the tailwinds are in your favor for the sector at large, but would it spread uniformly across the three listed businesses right now, or if some others get listed as well, or would it get absorbed in a much better fashion by companies which, for example, a Teamlease, which has got specific pockets of expertise, versus maybe a Quess Corp or an SIS, which have got specialties in some other pockets? Would it be a uniform spreading across for companies in each pocket, or would it get concentrated in specific pockets?
Well, if you see, there is definitely an advantage of scale. So when you look at staffing, companies like Teamlease or Quess definitely have an advantage of scale, and scale does play a very big role, be it in terms of profitability or be in terms of getting the additional market share as the new markets get created. So I think there would be a disproportionate gain. The bigger players will get bigger in this case. Similarly, in case of private security, SIS is currently the second largest player in India, and you know there will be the top 4 or 5 players would gain at the cost of the smaller players. And remember, in both these sectors, we do have a very large tail in terms of it's a very fragmented market in both cases. So we do expect that the bigger players will sort of leverage their scale to gain in terms of market share as well as profitability.
Are you, in your note as well, are you being, are you able to predict this the way, you know, typically utility companies used to get predicted 10 years out? Very simple. You would have a standard linear set of growth that will come in, albeit in this case the numbers could be higher. But is it possible to predict 5-10 years out? The reason I'm asking this is, and something that we'll talk about with you as well, Teamlease, for example, about a month ago, when we spoke to the promoters about what's the quantum of growth that they see, and do they see this growth you know, coming up maybe 5 years, 6 years, 7 years out, the management seemed fairly confident. I don't see too many industries right now wherein business heads have visibility of 6, 7, 8 years out of a growth number which is northwards of 20-25%.
No, you're absolutely right. I think that confidence which you're talking about coming from the management, and also the numbers that we estimate, which are also in the range of 18-20%. I think the fact here is, you know, we are looking at industries where the penetration levels or the opportunities are very large. Take staffing, for example. We are looking at, in India, we are looking at about 160 million odd people which are currently employed on a non-contractual basis. As against that, only 2 million people which are employed in the flexi staffing industry. So as you can see, there is a very, you know, we are looking at a very big opportunity. Even 1 or 2 million people shifting from 160 million does have an impact on this segment. And I think this sheer under-penetration is something which is giving a lot of confidence to the management that this kind of growth can be sustained over not just 1 or 2 years, but beyond 5 or 7 years. And that is somewhat our thought process is as well, you know, be it security or be it staffing. I think there is high level of under-penetration in terms of what the opportunity can be. And I think that is where that confidence of growth over 5, 7 or even 10 years is coming from.
Alok, specifically talking about the flexi staffing space, and I was just going through your reports which has said that the sector has clocked nearly 16 to 17% CAGR in the past 5 years, and the sort of growth that you're preempting till 2025 is almost 3 times the number. Could you tell us where will this growth come from? Because flexi staffing is a space I'm sure not many are aware as of now in India.
No, you're right. I mean, if you see historically, 16-70% is what they have clocked. And now if you just extrapolate that number to over the next 8 or 10 years, I think you will see this sector size growing 3 times. But essentially at the core, what we are looking at is, again, I'll go back to my original numbers in terms of how the employment structure looks like in India, where, only 2 million people are currently employed in flexi staffing. And if you really go down to their business model and what it offers, actually a win-win situation for employees which are there in flexi staffing, also win-win situation also for the customer companies which are the clients, and for a company like Teamlease as well, or Quess as well. So I think this win-win situation for everybody is something which is driving that demand. And like I said, if you are able to clock 15-16% kind of growth every year, and if you just sort of extrapolate that over the next 7 or 8 years, I think the sector size which we expect, which we estimate is about $9 or $10 billion today, can actually triple by 2025. That's the basic thesis that we have.
And while we'll talk about each of these companies individually, Alok, if the sector size is to treble, would the premier players' size do more than that? Typically, the largest player will take a chunk of that growth, right?
Yes, I mean, what we have identified in this report is the 3 companies that we have covered. We believe that these companies have certain competitive advantage in their respective sectors, which will allow it to go probably 2-3% higher than what the industry or the other peers are growing at. So you're right in the sense that if this industry is to become 3 times of what it is right now, there is a high probability that these companies will actually be a little higher than that.
Yeah. So, let's talk about these individual names as well. I'm guessing that embedded in your bullishness is also an assumption that the operating metrics for each of these would go up, because when they got listed, they were operating at really poor operating margins, and they have shown that signs of improvement. So I'm guessing that's embedded there. But let's start off with the first one, Teamlease. Why do you like this one? And what are the, while everything is looking hunky-dory, what is it that investors should be wary of when they are looking at a business like Teamlease?
Sure. Essentially we should be looking at 2 questions. First is the opportunity, and which you have just discussed, that how big the opportunity can be. And if one is confident about the opportunity size getting 2x or 3x in the next 7-8 years, then the next obvious question is, which is the number 1 or number 2 player who's actually in a position to capitalize on that opportunity. And again, somebody like a Teamlease, which is a pure play company on the staffing sector in India, or flexi staffing sector in India, I think scale is already in its favor. That is one of the biggest factor, because if you look at staffing, I think the big pool of people that you have and the big pool of clients that these companies have, and that gives a very big advantage in terms of how you can become even bigger. So I think that is one of the big reasons why we like Teamlease, in the sense that it's a pure play on this specific segment, and it's a very clean play on that part. So I think that is something which that is the reason why we have a buy call on Teamlease. In terms of what can be challenges, obviously, there are very few companies in India which have probably 3 lakh, 4 lakh employees. So I think as these businesses get bigger, I think simultaneously they will have to streamline their operational processes to handle that kind of employee base. So I think that is something which we'll probably be able to see as these businesses grow. But that is the only thing that we think that something to monitor on.
Alok, how should one look at the valuations of this space? It is a niche sector. If somebody were to look at the margins also, they are pretty much on the lower side, between 1.5 or be 2 to 5%. I think for Quess Corp, it's somewhere about 4.5 to 5%. So how should one read the valuations before making that bet in terms of investment in this space?
Sure. So essentially there are 2 questions here. Yeah. Firstly, how should one look at margin profile? See, what I would say that instead of looking at just the margins. One should look at what is the capital return on capital employed or return on equity one is getting on these businesses, right? So if you actually see, there is very little capex that is needed in this business. In fact, the only capital one has to put forth is a little bit of working capital which goes in. So as a result, if you see the ROC profiles of these companies are in the range of 23-25%, which are actually very healthy. So the lower margin in this case, if one is to look at that in isolation, it probably would paint a wrong picture. So I think return profiles are something one should look at, which are actually very healthy. And secondly, on the valuations, again, because these stocks have been listed only in the past year or two, there is very short trading history in terms of what the right multiples should be. The way we have looked at these stocks is we want to capture the long-term opportunity these sectors have and these stocks have. So I would think that an absolute valuation or a cash flow based valuation is something which will capture that opportunity, and that's how we have arrived at our target prices. So I think relative valuation or P multiples sometimes can be reflective of the current market prevailing sentiment, and that is something which one can get into a trap of looking at maybe these stocks are overvalued at this point. But I think as long-term opportunities, these are great businesses to own.
Okay. What differentiates Quess Corp from the others? I mean, you spoke about Teamlease. Let's talk about Quess Corp now.
No, I think Quess Corp is a entirely different model compared to Teamlease. Like I said, Teamlease is a pure play on the flexi staffing sector in India. Quess Corp is actually leveraging its scale to be a part of all the growing segments which are there in business services, be it flexi staffing, be it security services, be it facility management. So I think that business model or the corporate philosophy there is a little different. The idea is there to be part of as many growth pockets within business services as possible. So we are looking at two companies where it's very difficult to pick one over the other, but just that as an investor, one will have to pick the business model he's most comfortable with. So it's not one over the other in my view.
Fine. So what is it? Do you foresee what a 25% CAGR growth in earnings for Quess over the next couple of years? What's the story, say maybe 5 years out for Quess Corp?
Right. So I think for all the three companies that we have covered in this report, I think the growth is a little accelerated over the next 2 or 3 years. But as we move beyond 2020 or 2021, there is a case for little moderation in growth, and these growth numbers will be probably 2 or 3% above the industry growth rate. So I think beyond 2 or 3 years, one should be looking at growth rates which are probably 18 or 20%, which are more reasonable, at the same time more realistic, at the same time more very healthy numbers, 18 to 20% growth over the next 4 to 5 years. So I think these are very realistic assumptions in my mind.
Alok, I'm just looking at the price target. Obviously, since you're bullish in this space, you have buy call on all these companies, SIS, Teamlease, as well as Quess Corp. For Teamlease, I think the current price is higher than the buy price you guys have of target of almost 2,700. Just want to check, if somebody wants to make a fresh investment, let's say into this niche sector, which one would have a better risk-reward ratio?
So I think again, if you see in the case of Teamlease, the stock has run up in the last 2 or 3 weeks. But at the same time, we would again reiterate that as business or as an opportunity, these still remain very attractive. It's just a matter of if the stock runs up 40 or 50%, sometimes it's a matter of time correction where, probably the stock won't deliver exceptional returns for a year or so. But at the same time, it's a great business to own in the future. So I think at this point of time, we are more from a risk reward perspective, we like SIS more because we feel that there is still a catch up to be played, and there is still a bit of understanding that the market needs to build in terms of understanding that space. So I think our preference out of the three is more for SIS at this point of time.
Somebody looking to park money in, looking at hearing this conversation, that you believe that there could be a 5, 6, 7 year story, of course, which also need to be monitored. Even then, SIS would find preference over Teamlease or a Quess Corp?
like I said, I think all three stocks are actually, if you're looking for 5 or 7 years out, I think there is no case for one over the other.
Okay.
It's just so I think, but if somebody is having a time horizon of 1 or 2 years, which ideally you shouldn't have in this sort of opportunities there in front of you, but still then we are saying that yes, there is a bit of preference for SIs. But otherwise, if you're looking at a story 5 or 7 years or 8 years, I think these are all three are great businesses to own.
One last question, Alok, and that is, would you believe that with the operational metrics of these companies improving, would the growth beyond FY20, while the top line may moderate a bit, can the bottom line numbers remain accelerated because improving operational metrics?
No, I think more or less, if you see beyond 2 or 3 years out, I think beyond you're still looking at 18 or 20% growth at the top line. I think that kind of growth will flow down to the bottom line as well. Look, at the end of the day, there will be a little bit of margin improvement. So I think what you're looking at is a bottom line growing probably 1 or 2% higher than your top line. I think that's a realistic scenario to assume at this point of time.
I'm sure it's a moving picture. It's very, very difficult to predict what will happen 5 years out because the business may change so much. But Alok, really appreciate your time. Thank you so much for writing this report and sharing with us your thoughts. Appreciate you being with us today.